Today, we're talking about dividends. And if you type in dividends into YouTube, I actually come up as the #1 short for monthly paying dividend stocks, over 21,000 views. And we're actually going to go over that list right now and also look at earnings on our WEBULL and also the NASDAQ history. Very simple to use, and I hope you guys enjoy this video. Hope I earned your like, and hopefully you become a subscriber if you like this. Now, I started this channel as a investing for beginners channel. I have thus mastered that pretty much, and it got a little boring for me, honestly, the long-term holding and dividend investing. Now, I still have a large portfolio that has income coming in every single month and quarterly, but at the same time, I've moved on to day trading and swing trading as a more I guess, active way to stay trading. Now, investing in dividends can be a very lucrative and very beneficial way to increase your portfolio size. You can see dividends anywhere from, 0.5% point a year to all the way up to 10% per year. And the higher the dividend percentage yield, the more risk involved. So here is a most popular dividend history page, right? So here are some interesting companies that you can look at and maybe that you've heard of. Now, I'm going to talk about a few companies you may not have heard of, okay? So right here, we're going to go ahead and type in, let's go ahead and type in Gladstone, okay? I'll use this as an example because it's a very great company to get started with if you're long-term investing. As you can see, this has a $2 per share dividend yield. So for every one share you own, it pays out $2 per year. That's a 6.8% dividend yield with a PE ratio of 24.82. Okay, now they do pay out monthly. It looks like they've been paying 16 cents per share per month, right? April, May, June, July, August, no, all the way up to December. They even had a special dividend payout of 40 cents per share in December, and they usually do this every December, every year. They will pay you the normal amount and they will pay you a special dividend, which is great, right? Which is pretty awesome. Now, moving on to WEBULL, we can see Gladstone is actually appreciated over time, and this actually verifies dividends were paid out, right? So it looks like it was paying out about 8 cents in August 23. In 2023, it was paying out 8 cents. It had a reverse split 1-for-2, which increased the share price, and then now they're paying out 16 cents per share. Okay, estimated earnings are right here. Revenue 23 million, August 25 million. And as you can see, if you were to have bought in on this company, even just at the beginning of this year, right, January of 2024 to January now 2025, okay, let's take a look at that. If you would have invested, say right here, when it crossed over at $19 to where it is today, in 376 days, a little more than a year, you'd be up 50% on your initial investment, while also, right, being able to get paid monthly dividends. So say you had $1,000. We're going to do the math together real quick. Say you have $1,000. Okay, it goes up 50%. You made $500. Now in 12 months, you get paid out, okay, especially at $19. Let's see, how many shares can you buy with, if it was at 19, quick math here, real quick math at $19. Whoop. You'd be able to buy 50, let's just do 50, that's $950. So 50 shares, 950 bucks, almost 1,000. Now with those 50 shares, you'd get 16 cents per share. Okay, so real quick, we could ask Siri, what is 50 times 0.16? $8. Okay, $8 a month times 12. 8 times 12. You'd make an additional $96. Okay, let's just call it an even 100 because that 40-cent special dividend. That means you could have made, get this, $600 in 1 year by investing $1,000 in GLAD or Gladstone. That's why monthly paying stocks, certain ones like this, can be very lucrative when you get in at a good price. Now, Gladstone, not a bad company. Analyst, 83% of analysts are saying it's a hold. Sixth analyst, okay, this is a rating from sixth analyst. Current price target is at a high, so I wouldn't necessarily recommend buying into it at the moment, right? It's all about timing. And if we can get good timing and get this to pull back from 28 to maybe 25, maybe 22, heck, I'd even go back to $20 even and buy more at $20. But right now it's very overbought, right? It already looks like it's having some resistance here, showing a lot of selling pressure at these new high levels. Now remember, you know, let me showcase this to you. If you haven't traded or heard of Gladstone, right? They used to trade back at $4, $7, $10. It got up to $13, and then it went all the way back down to $5. Okay, and then from $5 went all the way back up to 20, came back down and tested that 200-day moving average to $13, and it started going back up from there. So what does that tell us? It's very bullish. There is a lot of room for it to continue to grow, but when it does push up like this, it's going to come back down and retest that moving average, right? It doesn't like to get away from the moving average too far. I used to do an old analogy about a car kind of staying inside the lane, and if you overcorrect and go outside the lane, you will need to readjust and get back inside the lane. Now I'm thinking more of the lines of like atmosphere, right? Gravity, okay? This moving average is the ground, and when it gets too far above it, it likes to come back down and touch the ground. Same in reverse, right? If it gets too below, too deep, it wants to come back up and retest this moving average. Okay, I hope that helps. I have helpful videos talking more about key levels like support and resistance, moving averages, and technical indicators that you can use to your advantage. It's all 100% free in our Learn to Earn lesson library, so definitely check it out. Again, 100% free, very useful. So if we can get a nice retracement back to this $19, $20 level, that means we can get a 34% discount, right? We could buy this company. So you bought it for $1,000. It went up $600. You have $1,600 now. You sell off the top. You take your $600 profit. Do whatever you want with it. Go on a vacation. Invest in another company. And then when this pulls back, you use that same $1,000 and you buy again at a low, like $19 again, $20, and you ride it up for another 50% gain. Now what we're doing is we are not only optimizing our potential for holding long term to get these monthly paying dividends, right? That's $100 a year in dividends right there on 100 shares or on 50 shares. Okay, this pulls back. Now you have 1,600 or close to 2,000. Now you have 100 shares. Now you're making $200 a year on dividends, and it appreciates up $1,000 instead of 500. Okay, and this is all about compounding over time. But knowing too that you don't necessarily have to hold through these up points, right? Through these high moments, I would be selling, I'd be making some profits, I'd be getting out and waiting for this to come back down a little bit. Now you can sell 50% of your position and still get dividends, or if you're comfortable holding, you're comfortable with where you are, then hold that $1,000 or $1,600 up here. Wait for it to pull back and then average down and buy more to that position when the price makes sense. You wouldn't buy, you wouldn't go to a store and buy milk for $10, right? $30 for milk, when you can go across the street or a little farther or wait maybe next week and buy it for $10 or $20, right? You want to wait for that discount and you want to find the best deal. I hope that makes sense. Now, moving on to another one that I really, really enjoy. Gladstone's great. It pays out really nicely now. I remember when it was paying out 7 to 8 cents a month, and I was pumped. I was like, oh, I got another 7 cents per share, right? And then it went up to 70 cents and then $7, right? And over time, it continues to grow $10, $20, $30 per month to where eventually that $90 a year can technically be $90 a month, okay? And it's all about compound interest, buying at those key levels, locking in profits, buying again. and holding long term. So the last one, there are so many that we can talk about. O Realty, okay, exact opposite of Gladstone. Gladstone's at a resistance level, so we want to wait for this to pull back a little to buy more, or maybe, take our profits here and wait to get in at a better price. Whereas O Realty, another solid company that pays monthly, is the exact opposite. It's almost at a key support level, which is what we want to see. We want to be buying in the areas of support for the best deal. I want to buy Realty Income O for $50 a share. I don't want to pay $65 or $70 a share, right? Because what happens if you buy at these highs, right? Even if you're a long-term investor, you're buying at $65 and it has a significant pullback. It doesn't matter how many dividends you get that year, you're down 21% per share. Or for your position size, you're down 21%, almost $14 per share. And being down $14 per share to get 26 cents per share doesn't sound like a very good trade-off, does it? Now, by identifying resistance levels, not only can we become better day traders, but we can also become better long-term investors. We can become better opportunistic traders, and we can identify key levels where opportunity makes more sense. I'd rather buy at 50, and if it goes down to 50, 49, 47 as a long-term investor, 10% isn't so bad if you're holding long-term, for the potential to make 20, 30%, right? Risk to reward, compared to buying at 65, it going down 20 to 30%, right? And then the whole time you're waiting for it to just simply recover back to break even. So you had a position at the top, you were stressed and worried the entire time that it could continue to sell off and you're losing money. That doesn't put a good mental factor inside your head every day. And all that happens is it goes down 30%, it recovers 30%, you get out and you break even. That's no way to trade, right? So identifying key levels. I'd want to buy here, right? I'd want to buy in this area. All this area in the 50s and in the 50s. Buy in the 50s, sell in the 65s, lock in profits. Right? That's a huge move. From $50 to $65, $70, that's $20 per share. So if you had 100 shares, that is literally $2,000. Okay? 38% profit. And you're getting dividends. That's what's so cool about this as well. You're spending a good majority of time averaging into a nice $50 position on O Realty, getting 25 cents per share. Now it looks like it's 26 cents per share. Okay, say you have 50 shares at $2,500. Okay, just 50 shares, you're making a nice significant amount of money. What's 50 times 0.26? $13 a month. Okay, now $13 a month doesn't sound like a lot, but now let's times it over a year. 13 times 12. It's $156, okay? $156 a year to simply hold O Realty, plus you get that nice appreciation of 20 to 30%. Cool, right? 20 to 30% of $2,000, guys, is a lot. That could be anywhere from, 20% of 2,000 is, like $400. Yep, and then 30% would be 600, right? It's insane. It's insane. It's a great way to make some money. Okay, analyst here saying out of 23 analysts rating O Realty, they're saying it's a buy. 21% say strong buy, 8% say buy, 69% say hold. And because their average price target is at that $75 level, $62. Right now they're currently at $51.67, so it's a great price point to get into. It's been as high as $70 and a penny, and then sold off. Look at this sell off from $70 all the way down to 31. That is insane. Let's take a look at it. Yeah, from $70 to 31, it crashed 56% or $40 per share. So this is exactly what I'm talking about, locking in profits, right? We need to make sure that we can be opportunistic. We identify key levels to buy. This would have been at $35, $40, even $50, all the way to 70, right? From 2018 to 2020, it went up 88%. Okay, it could have doubled your money. Locked in profits. Let it sell off to 31, and it's doing the exact same thing. From that $31 level, where was it? Was it this one? Oh, right here. From $31 after that initial sell-off to where it hit $69 again, 114%. You could have doubled your money again. And the whole time, you're getting dividends. So I'm excited to, inform you guys on at least two of those companies, Gladstone and O. I also have a video that I just recently did. Let me bring it up here if I can. Why is it not letting me? Oh, I was looking at my other screen. I also did one which was the 10 monthly paying stocks. Shoot. Let me click on this real quick and we'll go to this guy. You can go to playlists, and if you go to dividends, which seems like I'm having difficulty finding right here. Jeez Louise. We are going to, it doesn't really give me a good visual view here. Let's see. Anyways, I have a lot of videos going over a lot of companies. This one right here, 10 best monthly paying stocks with 5 to 15% dividend yields that I either personally own, have owned in the past, or am thinking of putting into my portfolio, guys. 10 best monthly paying stocks right there. Also have a lot of other great videos you can watch as well. Definitely check them out. Thank you for your time. If you like this content, definitely subscribe to the channel. Smash that like button for me if I earned it. And let me know, do you like these videos on dividends, on monthly paying stocks? Do you want me to do more like this? Let me know in the comments. Thank you, and have a great day. Go watch one of these videos or one of these videos. Boom, boom, boom.